Good afternoon. I'm Shihoko Goto, Deputy Director for Geoeconomics and Acting Director of the Wilson Center's Asia program. It's my great pleasure to welcome you to the latest Wilson Policy Brief series to discuss the impact of financial sanctions on Russia. The United States and much of the world is now engaged in an economic war against Russia. The goal is to stop Russia's invasion of Ukraine in its tracks by bringing the Russian economy to its knees. There's an ever-growing list of sanctions being imposed, ranging from banning exports of critical supplies and technologies, imposing travel bans, seizing overseas assets of oligarchs and Russian companies, and of course, banning Russia from the international payment system and choking the flow of capital to and from Russia. In short, the existing international financial system is being weaponized against Vladimir Putin. But what about emerging non-state financial systems? How are cryptocurrencies impacted by these sanctions? And how much of a loophole can they provide to rogue states and bad actors? Here to discuss the role of financial markets and cryptocurrencies in the war against Russia are Meg Lundsager, a former US Executive Director of the IMF and current Wilson Center Public Policy Fellow, and Marco Dell'Erbra, a Wilson Center Global Fellow and Assistant Professor of Corporate and Financial Law at the University of Zurich. Let me first turn to you, Meg, to address how effective the measures currently imposed against Russia have been to marginalize Moscow from the global economy. I hope you can also discuss whether Russian action to counter those moves, such as the central bank's decision this week to more than double interest rates to boost the value of the ruble, can the Russian economy continue to be effective, independent from established international financial networks?
Thank you for inviting me, Shihoko, and that's a very good question. The sanctions that have been imposed by Western governments are dramatic and were escalated quickly over the last weekend. And so we've seen Russians' access to a good chunk of its foreign exchange reserves, its dollars, its euro accounts abroad, frozen, so they cannot access them. So because of that and the impact on the ruble, as you said, they have raised interest rates. They've also imposed exchange controls limiting how Russians can send money outside the country to pay for some of their foreign obligations. They've also imposed an export surrender requirement saying that 80% of all export receipts have to be converted to rubles within Russia so they can have an increase in the foreign exchange reserves. And so it has had a pretty, dramatic impact in terms of limiting Russia's ability to easily access its usable currencies in the rest of the world. With that said, it hasn't completely frozen them out of global financial markets. They have foreign exchange that is denominated in Chinese renminbi that can pay for trade with China. They have gold reserves, and the gold is physically in Russia. They made sure to move it all out of any foreign gold depositories around the world. So it's all back in Russia. Of course, selling gold is not something easily done. And if they sell gold, whoever's buying it is going to want to have it in their own depository, in their own country. So that is not an easily usable immediate reserve. But basically, our sanctions exclude payments for oil and gas. And so that should allow Russia to continue getting the most of its foreign exchange receipts. And the reality is that the sanctions have had sort of a secondary impact of refineries being worried about buying Russian oil or gas and falling afoul of US sanctions and other sanctions. So it's already having a chilling effect on the market, even if supposedly some of those transactions are not sanctioned. We've seen impacts already on global pricing. Russia's also a big exporter of wheat, as is Ukraine, other grains, and some basic rare earths that are important in the production of semiconductors and catalytic converters. So we are going to see impacts from that on the real economy. But for right now, Russia pretty much is frozen out of the Western financial system. That doesn't mean they can't engage in trade at some levels and can't access some payments, but it'll be much more difficult, much more expensive. As far as internally in Russia, they have protected their domestic system. They have a domestic payment system. Their domestic debt is not that high. They've paid a lot of it down. They've converted foreign exchange debt to domestic debt, and they have plenty of cash on hand. The central bank built up its physical cash of euros and dollars, knowing that Russians, anytime they're nervous, they convert their deposits to cash, which we've seen, the lines at the ATM machines. So the central bank was well prepared for that. So the impact of the sanctions will be severe. I think that'll build over time. But the reality is that hasn't turned Putin around these first few days, despite how surprisingly severe, how quickly these sanctions were increased in severity over the weekend. That was basically unprecedented, but it hasn't had the desired impact. So we'll see over time if it brings him to the negotiating table, we work out a settlement that still leaves an independent Ukraine in place.
Thanks, Meg, for those sobering words. So you've already mentioned oil and gas being excluded from the sanctions. You've also mentioned renminbi and gold holdings, which brings me to the question of loopholes. So Marco, this is the first major test case of whether cryptocurrencies can help rogue nations avert the punitive impact of sanctions. What are the limitations of the cryptocurrency market as it currently stands for the Russian government to avoid sanctions?
Thank you, Shihoko, for the invitation. This is a topical issue that is part of the Digital Assets Forum, an initiative led by Alan Rechtschaffen within the Wilson Center that is launching a lot of new initiatives, including a blog post that we will publish on a monthly basis on these topics. So when we look at the relationship between cryptocurrencies and sanctions, we should first look at the precedents, at some precedents. There were sanctioned entities that were using cryptocurrencies, Russia, North Korea, Venezuela, Iran, and Syria, that made it to raise the funds through ransomwares and crypto mining. And what is astonishing as a precedent is that North Korea could raise $2 billion in 2019 through cryptocurrencies that helped it to build its own nuclear weapon program. And more generally, beyond cryptocurrencies, there's the fintech ecosystem, and Iran, for example, created a financial ecosystem exploiting technological and legal loopholes to interact with outside commercial channel, developing their own set of financial systems. So Iran could rely on a strong network, on a strong ecosystem of fintech, regtech, and insurtech that was certainly more expensive than the traditional financial system for Iranians, but still allowed them to enjoy certain services. Now, focusing more specifically on Russia and crypto, there are three main questions, I think, that we have to carefully think about. One question is, can Russia buy Bitcoin to mitigate the risks related to the devaluation of the ruble? And if we look at the trading activities between ruble and Bitcoin and Tether in the last weeks, they have doubled. Now, it would be difficult to create a link between this activity and the institutions from Russia, but it cannot be excluded. And another problem is, can Russia develop alternative tools to mitigate the sanctions? And excluding the Russian SWIFT that was not successful, there are two alternatives that remain in place: a Russian e-ruble so a central bank digital currency that would serve as a tool to further reduce the dependence on US dollar, and the Central Bank of Russia could build on this a rublev to a large number of those countries that would accept these central bank digital currencies without converting it in dollars. And there's also another related problem. Russia could rely on hacking techniques to steal digital currencies and mitigate the problems of sanctions, the financial problems of sanctions. And finally, just the very last point is whether Russia as a state can develop a system that could help mask the origin of cryptocurrency transactions. So there are, as we know, cryptocurrency transactions are recorded on in principle, fully transparent and immutable blockchain ledger. But in this way, relying on a new sort of infrastructure, masking the origin of cryptocurrency transactions, business could trade with Russian entities, avoiding any detection.
Thank you so much, Marco. If I can actually ask a follow-up to that, we know that central banks and financial agencies in the United States and across the world are stepping up their monitoring of blockchains. Are they actually able to, is their technology able to actually make sufficient connection between the flow, the exchange, and actually pinpoint and target and take action against irregular activities?
So the current state of central bank digital currencies in the world, if you look at the Project Hamilton, if you look at the discussions here in Europe on the e-euro, in Switzerland on a wholesale digital currency, we are still at a very early stage. I would say it's difficult to make final conclusions, and when trying to answer these kind of questions, anyways, it's always important to look at the different design alternatives that are in the hands of central bankers when deciding how to implement these central bank digital currencies, if they are targeting the all public, or so all the citizens, or they're looking at the at certain segments of the markets. As in the case of wholesale digital currencies, probably relying on wholesale digital currencies, it might be easier at an early stage to take control of the situations by targeting the biggest transactions.
Great, thank you. I have a question, I think, to both you, Marco, as well as Meg. Perhaps Meg can tackle it first. It's from Professor Samuel Perez. Can Russia use their 17 billion of SDRs and exchange them for crypto? If so, how?
Well, that's a really good question. I don't know, Shihoko, but they can use their SDRs in transactions with countries that are willing to accept those those SDRs and give them something in exchange. So for instance, they could use their SDRs to pay for imports from China. And as we know, Russia still imports quite a bit from China. So it could use those SDRs for that purpose. Perhaps China would convert that into crypto for them, but these are large volumes, and I'm not sure, ultimately the utility of crypto is to be able to use it for a payment. And so we've already seen the fear factor, the uncertainty factor pervading global markets. So I'm sure in terms of many companies engaging in international trade investment flows, they're going to be a little leery of dealing in crypto and official transactions with another country. And so I'm not so sure that that's going to be a big way for them to escape sanctions. The SDRs on their own can just be used pure and simple with another country willing to accept SDRs in payment. That's part of the IMF network, which is most countries in the world. The question is China willing to do that? Accept 17 billion, whatever it is, about $24 billion worth of SDRs from Russia as payment for imports? I don't know. I haven't perceived that China, as cautious as it's been in a lot of its public commentary, I'm not sure Russia wants to be seen as the financial savior, that China wants to be seen as a financial savior for Russia here in terms of evading sanctions. And I've already seen some press reports on some Chinese banks being not willing to engage in some transactions with Russia because they're worried about falling afoul of US and other Western sanctions that'll impact their transactions with us and with European countries or third parties around the world. So I'm just not sure. It'll be really interesting to see in terms of how much crypto plays a role in trying to circumvent this. I could see it more as a part of some companies trying to do this, but they've got to be assured that they've got partners on the other side willing to accept it. So we'll see over time how that unfolds. But I don't think that's going to be the answer to Russia's troubles, Russia being able to evade the sanctions by turning wholesale to crypto.
Marco, would you like to add to that? Or?
Yeah, no, I was thinking about how sanctions work, right? Sanctions work because there are certain financial actors that enforce them. And in the pre-technological disruption era, the financial system relied mostly on banks enforcing somehow rigorous control in terms of anti-money laundering and know your customer rules when it came to scrutinize the origin of the transactions and potentially block them and report them to the governments. This paradigm has changed with a lot of crypto exchanges that are regulated and other crypto exchanges that are not regulated and might have some connections with the dark web. So beyond the problem of this massive quantity of money, I would say that crypto exchanges could be used to move, if not the whole amount of 24 billion, at least a significant part within time, within a certain medium time horizon. And if I can add something, crypto exchanges remain the main unsolved issue. Exactly like market infrastructures are essential in traditional economy for developing it and making it efficient and strong. Crypto exchanges are the market infrastructures within the crypto economy. So the fact that they are still unregulated, in particular the decentralized ones, is a reason of concern. And I'm not surprised here that Christine Lagarde called for a rigorous regulatory action, at least in Europe, looking at the European Union that already started to think about a potential regulation for the markets in crypto assets in 2020. And at the time, the geopolitical threat was represented by Libra issuing a global stablecoin. And the European Union was very much concerned about the implications. Now there's a new geopolitical threat, a war that could accelerate the process towards full regulation of market infrastructures for the crypto economy. Also to avoid the possibility that there might be some ways for the oligarchs to circumvent the sanctions.
Thank you, Marco. we have a number of questions. Let me turn to a question from Robert Carlson, who asks, it's kind of related to our earlier question about China's influence and China-Russia relations. To what extent can China's economic support to Russia ameliorate the impact of US and global sanctions, and are Western countries prepared to take the additional step of sanctioning China for its support of Russia?
Can you read the question, because there was a disruption in the sound?
I'm sorry. Okay, so to what extent can China's economic support to Russia ameliorate the impact of US and global sanctions? And are Western countries prepared to take the additional step of sanctioning China for its support of Russia?
I think that an alliance China-Russia would solve a lot of problems for Russia. Some of the concerns that are emerging on the Russian side these days are very much related to the not so warm support from China, that a commercial alliance between these two giants would definitely be beneficial for them. And they could also create, from the perspective of the technological development, a privileged relationship for developing new interactions among their central bank digital currencies. I want to mention here that the yuan is one of the most developed projects in terms of central banking digital currencies, although it comes with very peculiar choices in terms of design.
Right. Yeah.
Now, I would just add that I think Russia will be the junior partner in any kind of partnership with China. China's a much bigger economy, much bigger global impact, much bigger markets. Yes, there's an important oil and gas trade between the two countries. Russia buys a lot of goods from China as well, but any sort of financial market using payment system, both countries have developed internal payment systems, so to protect themselves from the West. But China would want its system to be the dominant usage. It's not going to be adopting the Russian system and settling in rubles. It's going to want Russia to adopt the Chinese system and settle in renminbi. So very much Russia would be the junior partner. They'd be accepting the way China is setting up any kind of system like this.
Yeah, so let's go back to a point about the emergence of central bank digital currencies. And Marco, you pointed out that China is really at the forefront of developing this on a large scale. We have a question from Vishal Kapoor. Given the effort required to develop a CBDC or a system to mask the origin of the crypto source, what time frame do you think Russia could develop such systems? I guess this is assuming that this is what Russia would do, and it would actually dovetail nicely with what the technology competition spheres that we're seeing worldwide, so that Russia would actually have its own digital currency system as well as China. And then presumably the United States and its allies would have another sphere of digital currency space as well.
So there were some debates in Russia about a central bank digital currency in 2020, but at that point, I don't know what kind of initiatives the central bank of Russia was putting in place. So maybe I said China. I was in 2020. I was referring to Russia. On the basis of what we observe in Europe and the US, the process is not very fast. It would take some time to set up an efficient and reliable payment system. So the time horizon could be of at least 1 year. I mean, if they go very fast, but I wouldn't say this would be enough. So maybe 2 years would be reasonable. But again, we don't know at what stage Russians are in terms of internal developments of a central bank digital currency.
Yeah, Shihoko, I would just add that for central banks to adopt digital currencies, it has a lot of domestic implications. For instance, if the central bank is going to be taking deposits from ordinary citizens like you and me in our own country, what's the central bank going to do with that? You know, the way our banking systems work, when we put money in our savings account or checking accounts, the bank then lends it out because we don't all at the very same time ask to withdraw that money in cash. So what would a central bank do? What kind of assets would it invest in? Then it's investing, you know, choosing assets to invest in their own economy. So I see a lot of difficulties for central banks if they intend to use a digital currency to basically become the ordinary medium of exchange. What happens to then its own banking sector and the role of the banking sector in providing credit, extending credit? We don't really want central banks evaluating credit on individuals and corporations in our economies. So I do think it'll take time for central banks to figure out how they could issue a digital currency and how it would work and what the implications would be on their own domestic financial sectors. So I think Marco's absolutely right. It'll be some time before we really see establishment of effective central bank digital currencies.
If I can add just one more thing. We were used to look at this. I perfectly agree with you, Meg. Just one more point, one more. I want to add a nuance. All these Project Hamilton, Digital Euro, and so on, have been developed in times of peace for these for the countries that were developing these new tools. Russia might be the first country to develop central bank digital currencies in a time of deep crisis. Maybe this war could turn into something different, potentially a civil war in case there is the idea of a golpe against Putin. And these are also factors that might accelerate or slow down the process towards the adoption of a central bank digital currencies when comparing Russia with other central banks moving towards these new instruments.
Thank you. Let me turn back to the crypto issue. We have a question from Sigal Mandelka, who makes a point that isn't there enough transparency in the crypto market, which would make it very difficult for money to actually be moved unnoticed.
Yeah, so as I see from his question, this also deals with the problem of the regulation of crypto exchanges. I disagree with the fact that crypto exchanges are regulated all over the world. There might be different ways to regulate these market infrastructures, and then there might be different regulations affecting the business in a more severe way than others. And there's a lot of regulatory arbitrage currently in place. The problem of decentralization has not been fully resolved. So centralized crypto exchanges are better regulated than decentralized crypto exchanges that are the future, of course, but this future comes with a lot of unsolved problems. And that's why the European Union was so concerned in 2020 and is concerned even now. So I would say that in crypto exchanges, there are different problems of transparency at different levels. There are different major conflict of interest also within this, I would say, systemically important financial institutions that have to be solved for the benefit of investor protection, financial stability, and more broader anti-money laundering concerns. For example, it's absolutely usual that a crypto exchange has its own stable coin, and this might lead to significant concerns. And these are not abstract theoretical considerations. This has already happened in the past years.
Right. So we've actually gone slightly over our designated time of half an hour. But if I can turn to both of you, if you have any final thoughts about the resilience of the Russian economy to withstand the economic warfare that it is being confronted with at the moment, and if there is any possibility for Russia to continue to circumvent this in the existing system, Meg, and in using the alternative cryptocurrencies, Marco.
Yeah, thanks, Shihoko. I do think in terms of the internal Russian economy, they're pretty well able to keep functioning domestically in terms of their own payment system, having a manageable fiscal position, adequate revenues. So I don't see the impact there. The impact will more be on the real side in terms of how the sanctions impact Russia's ability to get critical imports, to make critical payments abroad, in terms of the interlinkages that Russian companies, Russian citizens have externally. And so that's where it will bite, and that's where I think the impact will be felt. With that said, I don't think Putin feels too much worry or sympathy for ordinary Russians or companies in terms of how they're impacted by all this. So I'm just not sure that it's going to have the impact, an immediate impact, which is what we would all really want to see to stop the fighting in Ukraine.
Okay.
Yeah, I agree with Meg, and I would say that technology could serve as a further tool for mitigating, could be an opportunity for mitigating the sanctions, internally and externally in the relationships that Russia and its oligarchs might have with the rest of the world. When I think about the internal opportunity, I'm figuring out something consistent with what Iran did, so developing a fintech ecosystem that would substitute the official global financial system. And in terms of external relationships, I do see fintech, especially the segment that is not fully regulated, as an opportunity for circumventing the sanctions, both at the institutional level and individual level when we look at the oligarchs. So we should react fast also in terms of regulation. And it's important to come up with an international regulatory response that is adequate and not fragmented, especially when it comes to regulating market infrastructures.
Great. And I know we can actually continue this conversation about what those actual measures can be and how there can be coordination, or what the sources of contention can be. But I think that's another conversation for another time. For now, thank you, Meg. Thank you, Marco, for being with us here today. And thank you to all of you for joining us at very short notice on a very rapidly evolving situation and topic. So thank you again for being with us, and I hope you'll be able to join us again soon. Bye-bye.
Thank you, Shihoko.
Thank you, Shihoko. Nice to be with all of you.